Welcome everybody to a new analysis of Tradomics focus on the US tech stocks. Before we dive into this video analysis, I would like to recommend to all of you to subscribe to the channel so you can receive notifications about our videos as soon as possible. So since these videos analysis are time sensitive, the sooner you get the notification, the better it is for you to manage your positions on your favorite stocks. So let's start with Microsoft. According to last video analysis that we issued, we were saying that we would have expected from this low a bounce back to the upside because we had to close a T+2 upward cycle, and this is exactly what happened. And then we were also foreseeing this downtrend because after the closing of a T+2, a new T+2 could have been generated, and therefore downtrend to the downside to allow in terms of time the development of a new T+2. So analysis that was perfectly correct, and now we can update the chart and especially remove the arrows and forecast what can happen from a statistical perspective by using our T cycle analysis for the next weeks. So first of all, let's remove the arrows, and let's also put the T+2 upward cycle on the candle occurred on the 22nd of August 2024. So basically the pattern is definitely similar to the Nasdaq. So you can also watch the yesterday's analysis focus on the US indexes. And if we gauge time, we have from the top to the second top here 34 bars, which is a median duration encompassed between 24 and 44 bars. From this low here, we said also during the last analysis that we could expect not just a T+1 but something more. And now considering the duration, so the amount of the candles over this low, here we can have not just a T+1 but also a T+2 definitely, or even a T+3. And also from this top here we have basically proof that it's not just even a T+3 but even a T+4, or what we can expect here is a T+5. We can expect a T+5 because of the duration here. So from this top of the T+5 to this top, we have had 242 bars, which is a median duration encompassed in a yearly cycle, 190, 338. We have more than a T+2 now that is below this top. And on top, we have broken this price level and also this price level. So here we have really high chance to have not just a T+3, but even a T+5. With a T+5 in development, it means that we cannot go back to the top for at least 48 bars. At the moment, we have 45, and this T+5 is in development. Another thing that is important to note is that what is happening here is after a T+5 upward cycle, we are about to develop a new T+5 upward cycle. And secondly, if we look at the downward cycle, here we have a T+5 that has generated a T+3 3-month cycle, downward cycle positive, another T+3, which is the sum, it's a T+4 positive cycle. Now from here, a T+4 has turned into a negative cycle. So it means that the forecast is that with this T+2 or T+3, given that this low is at $386 and this low is at $384, we expect to return back to this low and even go beyond, because the natural closing of this T plus 4 would be basically to have a cycle, a negative cycle that has a low which is lower compared to the low from which it started. So be now really careful, because the downtrend may not be over yet. May not be over yet because we have had also some signals yesterday that we had a candle here that was pulsed back from the moving average 200 period. So we have had the first and the second candle that were basically floating on the moving average 200 period, and then we have had this, let's say, long red candle. And also on top, another important insight that I'm going to give it to you is that as for the Nasdaq index and also Standard & Poor index, we have a weekly cycle that is now negative, and we can extend the downtrend until 11 days in the worst case scenario. So we might have downtrend until Thursday, 12th of September. That would be the worst case scenario. So from the beginning of the next week, we can have again downtrend, and from the mid of next week we can have a bounce back to the upside. Okay, but keep in mind that the natural target would be to return into this area around $384, and the second target would be this one at $364. So this is also to allow the closing of a T plus 5 downward cycle. Okay, so this is exactly what is happening to Microsoft at the moment. Also not on Microsoft, but we will see on other US tech stocks that we have a similar situation. So let's move to the next one. On Apple, according to the last analysis that we issued, we have a situation that is particularly different compared to Amazon and Microsoft. So here we were saying that this T plus 5 upward cycle has turned into a positive one. So therefore, the price is binded to keep going to the uptrend until its minimum duration, which is 190 days. So we can have a trend to the upside at least, um, technically speaking, at least on the 16th of September, um, 17th of September. So given that now we are really close to its minimum duration, but we haven't updated the top yet, the move will be to basically return in this area and even go beyond. So this area is at $236.96. So we have had the first upward T plus 4, 6 months upward cycle. We have had a new development of a T plus 4, and at the same time we have closed a T plus 3, a downward cycle with a total duration of 72 bars. Now, the what can happen during the next weeks is pretty straightforward for those that are that are starting to be familiar with the analysis. So we were expecting a bounce back to the upside to begin at T plus 3 and then a retracement to close what? To close a downward cycle, but in this case is a T plus 1, but also begin the T plus 2 upward cycle. So let's gauge the time from this top to this top, which is 33 bars. So let's update the chart. Firstly, T plus 2. Here we have at least a T or a T plus 1. So given that now we are in the development of this T plus 2 and we cannot go back before um, a minimum duration of a weekly cycle, then I would expect basically to have a cycle of this kind. And then once this is complete, then rebounds, gradual rebounds to return. Let's put maybe here a gradual rebounds to return slowly to the first swing here at $232, and then subsequently to $236.95. 96. So that's the situation on Apple. So we will continue gradually to move to the upside, to continue in the uptrend for the next months. But over the short term, another return in this area would be healthy to close the first T plus 2 downward cycle and then a return back to the upside. On Meta, we said during the last video analysis that here from this high, we can have a T plus 3, a T plus 4, which is positive, and therefore the price can proceed to the upside with some some retracement sessions, but basically a move that is mainly towards the upside. So here we have now a T plus 3, a T plus 4. We have had the first move here to close this T plus 3, then a second move to begin a new T plus 3. And then here from the stop, as for the other stock, we have the beginning of a T plus 2. So on this, from this stop, we have had the retracement to begin the T plus 2. And now we have from the downward perspective, the minimum of the days to complete a T plus 2, which is now in this case is 31 days. So here we are a little bit more advanced from a downward perspective cycles, and we have a weekly, let's put this one, a weekly cycle that also in this case, as for the Nasdaq and some other stock, is negative. So beginning of the next week, potential downtrend for the remaining days, which in this case are so 7, so we can proceed to the downside until mid of end of next week, but then we will have more than a median duration to begin a new T+2 downward cycle. So here the expectation is to have beginning of next week another candle or 2 candles, 3 candles to the downside, and then return back to the stop, back to the stop, and back to the stop, because here we have a T+4 that is basically positive. So I'm gonna clear a little bit the chart to give more clarity. So these are the errors from the other analysis, correct? Let's remove them. Let's also remove this one. And here I would say let's put a T+4. And let's put a T+3. From this low, now we have the condition to have a T+3. So basically, Meta will follow a pattern on the upside. We don't have here the conditions to close a T+5 yet. So we have 186 days. So of course we have more than 100 more days to first close the T+4, then have a retracement, so like this, then have a retracement to allow the close of a T+5, and then a new T+5. Last but not least, how long can we proceed to the uptrend for? And here we have the answer. So given that this is a T+4, in the best case scenario, we can update the tops until 168 bars, so until December 2024. So let's move to Google. On the last analysis that we issued on Google called the Magnificent Seven, I was saying that given that from this top, which was supposed to be a T+5, we didn't reach the minimum duration to close the T+5, because we had 185 bars out of 190. I was expecting to have another pulse back to the upside in order to have a minimum duration of days to close the upward T+5. But truly, this is did not happen, but rather we have had a Nash retracement back to the downside. So what is the reason for this harsh retracement? And this retracement is something that we have seen also on other stocks. Well, and I say it completely transparently that the analysis was wrong. So I started to find the reasons why, apart the earnings release, but which was basically over the expectation or in line with the expectation, but we have a retracement. So this is just to tell you that the earnings release now with years and years of trading, it's something that I'm not really, let's say, I don't really care much about. is the following. So here we have at a t plus 5, and this t plus 5 has done a first t plus 4, a second t plus 4, and the third t plus 4. So here we have had a duration of not just a t plus 5, but also a t plus 6, 422 bars. Now, given that this is not a t plus 5, but it's a t plus 4, and also let's gauge also the duration from here. This one is a t plus 4 as well. So the interpretation of the chart is that here we have a Bayer tongue. A Bayer tongue of a t plus 4 that is encompassed between multi-year cycles. And if you want to know more about the Bayer tongue, you can click on the introduction to the T cycle analysis, and the Bayer tongue are market anomalies and cannot be foreseen. So unfortunately here we have had an extension of a duration to the upside, which was basically an intermediate cycle, in this case a t plus 4, encompassed between a two t plus a 7, and now here there is the beginning of something that be more of a t plus 5 or a t plus 6 or a t plus 7. And if we have a t plus 6 or a t plus 7, we cannot go back to the top at least for 4 months, or for 6 months, or even a year. So here the situation is not so good for for investors. So we have to be really careful from this top what is in development. Okay, so let's clear the chart a little bit and let's go back. So first of all, let's remove this, and let's remove all the arrows. So here, potentially here there is a Bayer tongue, t plus 4, Bayer tongue, upward cycle. And because we have a Bayer tongue, then we have to be really careful what is happening here. So let's put the t plus 5. This is to say that the downward trend on Google can have more strength compared to the others. At the moment, it's a t plus 5, but we will monitor over time the situation. Of course, we have had a similar pathway regarding the t plus 2 upward cycles here. Here we had 30 days. Now we have had also the closing of the first t plus 2 here at 44 bars, perfect. But this t plus 2 is now definitely negative. So guess what? Another important insight. Here we can extend the downtrend at least for additional 24 bars. So now we have reached 24s. So this is the minimum duration, but we can also proceed to the downside until 30, which is a minimum duration. So we can proceed to the downside towards the 16th of December, but also we can extend until the 4th of October. So be now really careful, because this is turned into negative. This t plus 2 is turned into negative. Here we have had a Bayer tongue. So from this stop, we can have further downtrend to develop a really wider cycle, which is more than a t plus 5 or a t plus 6 or even a t plus 7. And be also careful to this low. So this is another alert $133, and this one is even the more important one, so $124. Because if we go lower to this point, then we will have a T plus 5, which is a negative cycle, and therefore we can proceed to the downside for eventually more days. We will keep the situation tracked, but here we have a T plus 2 that is negative. It's true that we have already a minimum duration to complete the T plus 2, but here with this candle, as for Microsoft, we have definitely lost the moving average 200 period. Therefore, the first target would be to close this gap up at $140.97 first, and then we have to monetarily close this swing at $131.40. So that's the situation we have on Google. I hope this is a valuable insight to manage your position. And here I'm talking especially to investors. So let's move to the next one. On Tesla, in the last analysis that I issued, I was saying two important things. The first one, and I will say it by saying keep it this information in the back of your mind, that we were about to close a T plus 5, and therefore we had already more than a minimum duration to close the T plus 5, 247 days. So first of all, we could have started a new T plus 5 when funds wanted. But also I was saying that given the fact that this was potentially a T plus 2, I wanted to let's say to consider the fact that being a T plus 2, we could have add a little bit more pushback to the upside, or some more days to the upside to close the T plus 2. But this did not happen because this was, and actually I was in doubt to have it like a T plus 2, but this was a T plus 1. So basically we have had a T plus 3 divided in 3 times T plus 1. So first T plus 1, second T plus 1, and third T plus 1. This pattern can happen, of course. It's a little bit more unusual rather than having a T plus 3 divided in first T plus 2 and second T plus 2. But of course, the T plus 3 here at its minimum days to close 49, you see, which basically um, 1 day after its minimum duration to have T plus 3 done. So 49 days. Of course, as always saying, the closer we are to the minimum of the maximum duration, the more the more seldom the situation is. So we tend to basically stay in the median duration to have the favor of the statistic. But in this case, we have had T plus 1, T plus 1, T plus 1, and we have had also a T plus 4 that add its minimum median duration to close the cycle. So now what we can say is that from the top here, we have the beginning of a T plus 5, as for the others. Or at least as for Microsoft, Amazon, and so on. And now here we have what? So we have here 27 bars, but we have here also 39 bars. So where is the T plus 2? So the T plus 2 can be here from this top, or even here from this top. In case the T plus 2 is defined here, we have already a positive cycle, and therefore we can expect a return back to the tops. Or if it's here, then the t plus 2, if here we have the t plus 2, then we don't have this condition. So we cannot say that we will return back to the upside or back to the tops. So what can we say about this thing? Let's leave the t plus 2 for the moment here, and let's also have a look at the downward cycles. So regarding the downward cycles, here we have the evidence that we closed what? A t plus 3, definitely. So we can put the t plus 3 here. And from this low to this low, we add the closing of t plus 1. So you see that Tesla, compared to the other stocks, has more a t plus 1 pattern rather than a t plus 2 pattern. So here from this t plus 1, we have had a nice push back to the upside, and we break out this swing. But now the thing is to understand whether the t plus 2 is here or here, because it makes completely different scenario. So over the short term, we have to check what? We have to check this swing, which is at $202. The duration from this weekly cycle is 7 days. So we have to carefully monitor next week what is going to happen, because if we go lower to this point, so if we break 202, then we might have more possibility to start a t plus 2 from this stop. And we have also to close this t plus 2. So let's see what is going to happen next week. Because if here we have a t plus 2, then we cannot go back to the top for at least a week or even more. And considering that here we have a t plus 5, potentially the t plus 2 is from this stop. Because otherwise, if it's from this top, then we will return back to the tops really fast. And we probably will not have the minimum duration to have a t plus 5. So I tend to give the privilege to this top to have a t plus 2 rather than this one. But I cannot say it today. So therefore, we have to really monitor how the situation will evolve. So I put an arrow here, and I put also another arrow here. So I'm expecting, as for the rest of the other stocks and the indexes, to have Monday and Tuesday back to the downside to close the weekly cycle, which is embedded also in the T plus 1. And let's see whether we will return back to the moving average 200 period. At that particular point in time, we will have the minimum duration to close eventually the T plus 2 and then a return back to the upside, or we can keep also going down for median duration until 31 days, or a maximum duration of 44 days. 44 days means that we can close the T plus 2 cycle, downward cycle, by the 4th of October 2024. If we have a median duration instead, we will close the T plus 2 around 16, 17, 18 of September. Okay, so let's see whether we will have a bounce touching the moving average 200 period. Let's monitor Monday and Tuesday, because will be important days to better understand whether the T plus 2 was born here or here. Okay. And last but not least, this is another important swing at $182, because if we go lower to this point, then we will have a T plus 3 um, that will turn into negative, and therefore more days to the downside eventually. Okay, so let's monitor closely the situation, and this is the target moving average, $202 to be reached by eventually by Monday or Tuesday next week. So let's move to the next one, which is Nvidia. On Nvidia, according to the last analysis that we issued, we were saying, as for Tesla, that we had to bear in the back of our mind that the minimum time for a T plus 5 was completed, and that from this top eventually we could have started a retracement for a new T plus 5. But also, given that here we have had the evidence not just a T plus 3 but a T plus 4, what I was expecting was to have a little bit more time to update the tops and then start at T plus 5, which did not happen, because from this top already we started to have an harsh retracement to begin actually at T plus 5. So basically in this case we have a setup that is as following. So from this top we have a new T plus 5 first of all, and from here we have not a T plus 4 but a T plus 3, because if we gauge the total duration, despite we had all the conditions to begin at T plus 4, we had actually a T plus 3. So we add 71 days, which is basically a T plus 3 duration. So you also can notice how it's sometimes it's tricky to frame the chart according to the cycles. But this is the challenge of having a methodology that is able to interpret the market at best. So we could have had a T plus 4 as an upward cycle and a T plus 4 as a downward cycle to have the same start with lag of how long, with a lag of 30 days. But here we have had a T plus 3 and here a T plus 4. Therefore, we have had a T plus 5 in divided in 3 periods. First T plus 3, second T plus 3, and third T plus 3. On the other side, regarding the downward cycles, now we have a situation as following. So we have a T plus 5 that is divided in the first T plus 4. Here we have a T plus 4 where we have a T plus 2 downward cycle that lasted 43 bars. Then with this candle here, we broke up the swing, and therefore this T plus 2 turned into a negative one. So T plus 2 negative, and the low from which it ended was lower compared from the low to which it started. Therefore, gauging the total duration, we obtain 29 bars. And therefore here we have a T plus 3. So at the moment we have a T plus 3, but also bear in the back of your mind that if we gauge the total duration from this low until this one, we have 190 bars, which is the minimum duration of a T plus 5. So you have also to bear in mind that from here we can start a new T plus 5, even if, as said also in the other analysis, generally it's seldom that we reach the minimum of the maximum duration of a certain cycle. Therefore, here we can have again a cycle in which we can proceed to the downside before closing completely this T plus 5 and then return back to the uptrend. So we also update the upward cycles here. We have a T plus 2, upward cycle. So what we can expect next is, as for the others, other stocks. So here we had a new weekly cycle that has reached 6 days. This one is negative. Therefore, we expect to have at least, well, 6 days is basically the minimum duration, but we might have some other days the beginning of the next week to the downtrend or to the downside, before completing the first T plus 2. We have reached 24 bars. So basically we have the same situation as for Microsoft or Amazon. So here we have to see a little bit more of a downtrend, at least another day at least, or if we want to have a median duration, we can go till 32 days until 16 17 of December. So by the mid of this month we will have more information whether we can start having a new T plus 2 on the edge for the majority of the stocks in analysis. Okay. Eventually we have as targets the moving average 200 period, but also this swing is particularly important at $90.69. If we don't return back to this low and we don't break this level, so 90.69, then from here we can have a T plus 5, and therefore a new T plus 5 would be basically the same condition as here. So we will have more push to the upside, also because at a certain point in time we will have to close a T plus 3 upward cycle. And in order to close a T plus 3 upward cycle, here we are already at 55 bars. So this is also true for the other stocks. Then we can basically start having such hook to the upside from the mid of next week, from the mid of this month to the end of this month. So that's why potentially this can be not just a T plus 3 but a T plus 5. Anyway, we have to monitor the situation, especially next week is crucial. Okay. Let's move to the next one, which is a new entry, and it's called Intel. I decided to include Intel in our analysis for two reasons. The first one is that Intel is one of the most prominent companies of the NASDAQ 100. And the second one is that investors might be worried about what is happening on Intel, especially in the light of the last weeks or months in which we had a sharp drop of the price. So this is the reason why we exist also, because we want to make investors and short-term traders or traders more aware about the future direction of the price on a statistical basis by using the T-cycle analysis. And especially we want to highlight how long the price can follow a certain pathway. So in this case, for Intel, we have to start to understand the situation here. We have to pick this candle that was made on the 26th of October 2023. So this is the key to understand what is going on. So first of all, this candle represents the beginning of a T plus 5, and the T plus 5 has had a nice um, rise to the upside of 55% or 57%. So basically a really nice nice uptrend that was developed in roughly a month. So from October 24 to December 26, yeah, so basically a month and a half. But then from this stop, we started a really sharp downtrend that now sees the price with minus 62%. So basically, it's a bear market. Having said that, we have to understand the cyclical situation. So with this T plus 5, with this gap down, what is turned into a negative one. And this happened after a duration of 125 days. So basically, when we have a situation in which we have a negative cycle, we have to expect that until its minimum duration, the price will follow the pathway in which the breaks occurred. So basically here we had a break of its low, and therefore we have to expect the price to continue to the downside until the minimum duration of a T plus 5, which is 190 days. Now we have reached a duration of 217 days. So we have the minimum duration to close at T plus 5. This is true. But we can also proceed to the downside for maximum duration, excluding Bayatong, so 338 days. So here, I would say one of the bad news is that we can proceed to the downside until February, end of February 20, end of, yeah, Monday, 3 March 2025. That would be the worst case scenario. But within that bad news, the good news is that we have already the minimum duration to begin at T plus 5. Now, the second bad news is that from this low, we started a cycle that is a T plus 2 or a T plus 3. And with this candle of yesterday's candle, or Friday's candle, we broke up the low from which this cycle started. And so we had the low at $18.84, and this low was $18.64. So this cycle has turned into a negative one. So that's why we are basically following the pathway. So first T plus 4, which is negative. Second T plus 4, which is negative. Divided in from here to here, we have a T plus 3. So if we have to consider this one as a T plus 3, then the answer is that we can proceed to the downside until a minimum duration of a T plus 3, which is 48 days, which is until 15 of October 2024. So here, unless we have a T plus 2 and then a new T plus 5, which might occur, but it's seldom, we will proceed to the downside at least for 48 bars until 15 of October. And guess what? On the 24th of October, there will be the earnings release. So here, let's say the risk is that we can proceed to the downside until the earnings. And this is something that we have to be aware. Let's see if in the past we have a target. So the first target would be, here we go. The first target here, we have to go back to February 2014. So the first target would be $17.54. And then here another one would be $16.25. Okay, so now be aware that the situation is not brilliant, and also it makes no sense, at least it's not a recommendation, but from a statistical perspective, it makes no sense to buy the stock, because here we have really this candle that is lower compared to this one, and at least here we have a T plus 2, T plus 3, which is in development, and therefore we have more days to the downside. So here, given that with this methodology you know it in advance, so if you want to buy the stock, then let's wait, or just wait. And statistically it makes no sense. Okay, so that's the thing. We have had also the closing of this T plus 2. Okay, and now we are 1, 2, 3, 4, 5 candles in development for the new T plus 2. So even if we buy here, we don't have the possibility to return back to the stop in quickly. So just be careful and try to manage your positions at best. And also for investors that are holding the stocks here, that's the situation. Um, so just be aware that there might be an entire month or even more in which the price can keep going down. Okay, so that's the situation on Intel. I hope that this video has given you a lot of information, a lot of insights on your favorite stocks, on the stocks you hold in your portfolio, on the stocks you trade on a regular basis. I appreciate if you put a like and you follow us, so you can notify as soon as possible about our analysis that has to be consumed or to be watched freshly. Because if you watch them after a few days, it might be too late. So it's better to be notified as soon as possible. If you want, please feel free to release comments or doubts or anything you have on your mind, um, so that I can answer. And also we appreciate also some critics if you want to see something different or if you want to see something more, etc. So any feedbacks for us, it's very warmly welcomed. So thanks to all of you for watching the video, and see you to the next episode.